Good evening, ladies and gentlemen. Today is the 28th of May, a Friday, and after the kind of massive up move that we saw towards yesterday's close, turns out it wasn't just expiry related, and we gapped up again today, and the data started to look extremely bullish. And for the longest time, we spent the day sideways, and as soon as we started to break the day's range, I decided to take an exit since I was already up more than 1% for the day. And yeah, the premiums are relatively quite low, but that's reflecting in the volatility in the market as well, where we're really not seeing too much of a big move to justify needing to have higher premiums. And yeah, it was a day where Reliance decided to make a 100-point move close to and rocketed, and it's still rocketing. As I speak, I took an exit at around 2 o'clock roughly, and it was an all right Friday. I don't think much money would have been made or lost in either direction unless you were going long in options. And yeah, I also exited my positional trade. I booked some amount of profits, and it had now come to break even. So I decided to take an exit and not carrying anything over the weekend because we are at an all-time high, and things can go either way from there. So thank you so much for watching. Have a great weekend, and I will catch you on Monday. Take care.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The pre-market has just settled, and it looks like we are opening in all-time high territory, 15,420. And what this basically does for us is doesn't give us much price action on the upside, and on the downside, a visible support has been every time we've broken 15,200, 1, 2, 3, 4 times. We have seen buy. So the put that we want to sell will be below 15,200, and considering it's a Friday, I'm going to just take a relatively risk off position. So we'll look to sell the 15,100 put, 100 points from the support. And what I'll do on the upside, because there is no price action to go by, we'll just look at, for example, the 15,400 short straddle, which has in it 250 points. So you can say roughly market is pricing in 250 points upside downside. On the downside, we are keeping 300 points. So on the upside as well, we will keep whatever is required to balance the premium. Uh, so 250 to 300 points on the upside from 15,400. So 650 or 700, 15,650 or 15,700 will be the strike for the call. I'll just wait for market to settle because we're gapping up to unknown territory. So I might wait the first 15-20 minutes or even half an hour. Just wait it out. Let the market settle. Whatever jitters are pending from yesterday, let them play out, and then probably take entry. I don't like entering early on gap ups because gap ups invariably lead to a fall in IV and prices are bad. But if the gap up gets sold into, then that fall is very quickly reversed, and that becomes a problem. To put in simple language, when we have a gap up, put options lose a lot of value, call options don't gain as much, but as soon as we start dipping, then put options start to put on a lot of value. I prefer gap downs because during gap downs put options go through the roof, and that's a good time to enter. And generally there is the fear builds up much quicker than the greed. So we'll keep you posted. Time is 9:10. We'll probably wait a little bit to enter the position for today. Okay, so the time is 9:23. We've opened above 15,400 and we're just hovering there. And what I've done is I've created an equidistant 600 point triangle, and yeah, basically not taking any direction until now. Here's what's going to happen. 15,500 is a big psychological level. I don't think we just will randomly cross across it intraday. So that should be more or less defended, and yesterday's close most likely should not break. So my idea will be is I would definitely be biased to the downside from here. So if we do break on the downside, then what I will do is roll down the call and keep taking in additional credit. I'm of the impression that more or less dips will continue to get bought for now. Until that changes, we'll work with the same hypothesis. The data for this weekly expiry will start building today, so won't be much significance in looking at the OI data and monthly data as well. We'll start taking a look after 10 o'clock to see what is visible. One more thing, this calendar spread where now this call has finally started expanding. The hedge is of course giving us more profit than what the short call is losing, but we'll wait till the end of today. By the end of the day, if the skew is looking the same as it is, then we'll have to take in additional put side credit once again. We'll keep you posted. Time is 9:25. So it'll take some more time for this data to develop. But one thing that's evident is short straddles being built at 15,400, 15,450 and 15,500. So currently from where the spot is, this is definitely bullish positioning. This call unwinding below 15,400 and short straddles built at all these three levels. In the monthly as well, we are seeing short straddles building up at 15,500, immense amount of put trading at 15,000. So very bullish positioning of data in the first 15 minutes of trade. Our position looks fine for now, so we'll keep it as is, but we'll not have to do too many adjustments with this range unless 15,500 just breaks intraday for whatever reason, which will not be easy. I mean, the strength in Reliance, the strength in IT, the strength in Bank Nifty, the strength everywhere. Everything is gapped up and holding. Okay, so one more nitty-gritty to point out. Along with the up move, wherein there is a slight delta based bleed on this, which is fine. There is one more issue that this triangle is facing because of the fall in IV, right? Of like fall in India VIX by that much, and the number of people who are shorting the 15,000 put today. If you see, our put spread hasn't actually given us any profit in the up move. So yesterday also this call spread was making 40,000 profit. This still is making, sorry, between this and this, but the put spread is actually not making us any money because of the fall in IV. The long puts have lost basically just as much as what the short puts have gained, even though it's a ratio. So yeah, that is one of the risks. But since we have done it in a ratio and a diagonal manner, we are protected. Had it been 1:1 and at the same strike, would definitely have been a little annoying. But just to deal with how bullish the data is, I'm just moving the puts to 15,150 because slightly balancing the delta. We'll get to what is exactly in a second. Okay, I've just moved up the puts slightly, not at the best price, but this is needed in order to protect the cascade. So puts are 300 points away, calls are 250 points away. In case there is some kind of a continued up move, we'll need the protection from these puts, which is why I've moved them up. Okay, so the plan now is to wait for a green candle of slightly, wherein this call of 15,650 expands to something like 37 plus. So if I can sell this around 37, 38, I would like to do that. So it's more or less the idea. What I'm doing is I'm moving in with both legs. I've already moved in from the put leg. The idea will be to move in with both legs to create a 500 point range instead of a 550 point range, and that should give us more potential for decay because there's not a lot happening in the market, and super OTM options don't have that much value to decay anyway. So we'll wait for a little bit. I mean, ideally, I would want to sell this at 37, 38, but if we start dipping to 15,400, then I will just sell it at whatever price is available. So one trade is an opportunistic trade, the other trade is risk management trade. Also, just to note, when we entered the trade, this was 26, this was 26, there's still 26 and 26. So, in the first 45 minutes until 10 o'clock, no move on the market, but also no like fall off in premiums as uh, one is generally accustomed to. Okay, so what is happening is Reliance is suddenly going to the moon, and uh, Bank Nifty is dipping slightly, but it's taking support at 35,200. Reliance is absolutely mooning. One way traffic. At this rate, it might head to 2100. This will be a great time to sell Reliance calls to cover the shares that I have. So I'll look at that trade later today. Okay, while I didn't get the price I wanted, but if you see the whole day we've been making a slight higher high pattern, and yeah, the strength and reliance seems to have cooled off now, and Bank Nifty is not really taking too much of a bounce. It's just holding around yesterday's close. The potential for a breakdown, potentially from profit booking, is very realistic, even though the data is very bullish. And to sort of protect myself against that, had to move down all the calls to 15,650. Of course, we didn't get the DK from this of 5 points that was available here, but when this was trading at 37, this was also trading at 26. So we got DK on the rather erosion of premium we got on the 15,700 call, which is fine. Um, this position is very good. It's 500 points we have, and it's perfectly centered at this point of time from where the spot is. So um, good enough way to hold it rather than trying to time entry on the short call. It's like midway point and of the day, and basically not a lot has happened. Reliance took a break from moving up and then continued to move up and is now up almost 5% for the day. Bank Nifty is super flat and slightly downtrending the entire day, but flat around yesterday's close in that region. And yeah, our strangle has about 61 points. We're perfectly centered and balanced. So we're going to continue holding this for the rest of the day, just trailing in the stop loss by about 2 points perhaps. At this point, we are up about 6 points and not a lot to do. The issue will be if Bank Nifty starts to break on the upside, then that will push us higher. But for now, not a lot to do. Okay, just added a trade. Shorted the Reliance 2200 call for 1000 quantity. My holdings cover about 1800 quantity. So at this kind of an up move, um, using that as an opportunity to cover half my position and take some credit on the call side with this kind of a spike. There'll be massive fear spike on the call side, and potentially there is a continued upside to Reliance. We're going to head about 2100, probably gap up over 2100 on Monday if we don't do it today. That's what the market is positioning towards, and I'm just taking this as a trade to cover part of my stocks. The time is 1:10, and I think the whole day is spent in 50-point range, and that is good for a strangle. And sitting on close to 9.5 points of gain, close to 10 points of gain. Um, at this point, just trailing in the stop loss. The idea will be just trail till the end, because if we continue to not move, there can easily be another 4-5 point fall off on the strangle value. We are having some kind of upside break. I'm using that as a cue to get out of the position. Uh, Ideally, you shouldn't get too much slippage, but invariably I will. I don't want to adjust this anymore. Friday, almost 10 points of DK. Just take it. There will be some amount of cooling off on the calls once the up move halts, but no point in staying in the position too long. Okay, done. Just this Reliance position that I've taken to cover my holdings is open. Good enough return, little more than 1% of the capital used. And I don't want a grade for it. No point. Like these calls can start to expand rapidly if we start heading towards 15,500. So I'm not expecting too much to happen from the put side. So for a Friday, overall, whatever said and done, decent outcome. Okay, just another thing. I had initially tried to adjust um, the double diagonal calendar spread. Now, right now, it is more or less uh, looking like from the data that we are going to gap up on Monday, and it's total possibility that our short strike goes in the money. We booked enough profit over the life of this trade, booked around 70k, and at this point, there's no more reason to continue holding on to this. So I'm just going to take the exit on this. Should be liquid enough to take that, and done. Exited everything, a little bit of slippage towards the end, and here it is showing that from exiting we have made a loss. Yes, we will make a loss from exiting because of the slippage, but yeah, done for the day. Don't have to worry about this gap up or gap down on Monday, so that's a better way of approaching this. Thank you so much for watching. I will catch you on Monday.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.